Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. It's my pleasure to be here again. And Tom and Steve have returned from on their way back from a fantastic West Coast tour. They did a 3-hour combined. It was like an educational tour de force, and evidently from Seattle, Spokane, and San Francisco, just tremendous success. Hearing rave reviews. And so much so, they will be on the East Coast doing the same thing very soon. Go to the front page of TFNN, check it out, because they'll be in the Boston area Saturday, March the 3rd, and I believe down in Florida, Orlando. Please just go to the front page, check it out, and you will see just when you can go to the free workshop that they gave in the other places, which they're going to be repeating. So, and I'm one of the team here at TFNN. If you haven't heard me before, I have a Monday, Wednesday, and Friday 1-hour call-in show. It's called the Tiger Technicians Hour, and I take your calls just like here at 877-927-6648. And I also have a service called the Opening Call, a very detailed daily report. Goes to the Tiger site. There are about 6 or 7 charts every single day. The two most important ones are probably the Dow chart. I'll just show you a picture of it. What I do every single day. This is what went out this morning. For those of you in Tiger TV and in the den, and you will see that there's an ascending, narrowing triangle. It's like we call it a rising wedge formation. And I've shown very clearly to subscribers, none of this is a surprise, because when it went to the last, in the Chapman wave, it's a very simple technique in its core. It goes from most identifiable low bar, and it goes to at least a peak D, 4 peaks higher, and then it can even go to an E and an F, sometimes even a G. But when you are using certain tools with it, it makes it much easier to comprehend and to understand that if it's holding certain support levels, it can go higher. And that's exactly what the Dow did. In the most recent high, back on the 26th of January, what we call a peak F top, it slumped in 3 days, 300 points, went to the uptrend support line. You can see that red line, but within it, there's a technique that I developed. It's called the inside track. That dashed line is what I call the propellant area. That dashed line at the top, red, is called the repellent area. If it breaks above it significantly, it is broken out. That's why it's green. If it breaks down from this, it's red, that major trend line. What are those trend lines doing? Well, the Dow closed today down $1.74 at 12,982 after breaking to a new recovery high at 13,013. So all the information that you see here, plus more of it that I add to the bottom of the chart, is what subscribers get every day. And what I was saying is that propellant line says that unless the Dow can significantly break above and get to the 13,000, I think I said 40s today, it'll be within the same context. And look what happened. It stopped right at that trend line. You see that plus sign? That's not a plus sign. That's a doji. It's a certain candle in Japanese charting. You open and close at the same level. And in this case, you've got equal spikes of the wick, that little narrow line, to the top and the bottom. In my work, it says, if the following session, if you close below it, there's a good chance that for at least 2 sessions, you're going to go to lower lows. The second session is very important. That would take us to Tuesday, because unless there's a reversal back into the candle and above it, you can continue lower. And what would that do? There's a particular candle I talk about, which is the Roman candle, that one here, the one from yesterday. And if you start to get into the wick, well, that red line is the 9-period exponential moving average. So if the Dow closes under 12,925 on Monday, we've got to be kind of careful, because the next support line, that major trend line, is at 12,890. So if the Dow closes under 12,880, and believe me, with oil pushing as it is, we've got to be somewhat careful. That's what I'll be watching. Now, the surprise will be, and I say surprise, why? Because I've got an alternate wave count here. This is leg F. It becomes peak F if there's a lower high below 13,013 on Monday. But if this extends and breaks out, I will have no choice but to say, hey, this could be an alternative leg B, and we are going higher. But within that context, what I show my subscribers every day is this chart with 5 different charts. It shows the Dow Industrial Average 120-minute chart made a peak D at 13,013. And it says that this is the support level that needs to hold. This is on a near-term basis, and that takes you to the 12,888 level. It says the volatility index went down to 1642 and then spiked today. Now, I shouldn't say spiked. It's up 52 cents. But actually, that's a hint to say be careful, because if the volatility index is hinting that there's nervousness, if the volatility index, which closed at 17.31 on Monday, goes to 1780 or 1810, we will be pulling back. If crude already spikes over the weekend, that could make the market very nervous. If everything's benign, there's a chance, and I'll explain as we move along, that there's up-channel support in the a different kind of a chart reading. In the Dow, right here, that chart level and that up-channel has support that's held for ever since it started this back in December, around the 22nd. So that is held, and in the S&P, that goes back also to the 21st, 22nd. And that level on the S&P will be is if the S&P closes underneath, let me give it to you right now, underneath 1342, close today at 1365, we are in a sell signal to sell mode in the S&P. But on a very near-term basis, that support is at about 1358, 7 points down. It's about 80 Dow points. Okay. Now, what I needed to do here is I wanted to go to the Dow to show the chart of the technicals. This yellow and red line here, that's the MACD. It's weak, but the price is holding up. See this little yellow red line? That's the stochastic. It's at 87%. That's still very strong. So now what I have to say is that in the weekly charts, we've broken out to a new recovery high. We've gone above the 12,876 high back in May. We've closed above it on a weekly basis. That's really good. The 9-period exponential moving average support is down at 12,674. And I would say on a worst-case basis, if there is a sell-off that starts next week, and my subscribers know exactly what we're looking at, that would say that the 12,600 to 12,529 level could very well be 400 or 500 points, a 5% correction, and then I think buyers will they'll be coming in. That's my impression, unless you've got that crude oil really spiking. Now the monthly chart, I'm going to show this. This is something very special. I don't often show this, but I'm going to do it right now. This chart right here, there's a certain 7-year cycle. I don't need to go into it. I just wanted to show the chart that this is leg E up in the monthly. And if you look at the history of this chart going all the way back to 1974, it actually goes way back to 1920, but let's go to 1974, you'll see that whenever we get to E or F, you've got to be a little bit careful unless it recycles. Now, when I talk about recycle, I'm going to do this. I wanted to go through all the numbers right now, but actually I never get a chance to do this for folks who have never seen my charts. For those who always come to my Monday, Wednesday, Friday show, they know what I'm always looking at. I'm going to be doing a webinar, a free webinar, on this coming Wednesday night, the 29th, which I believe is Dave White's birthday. So you've got to sign up at TFNN. It's starting to fill up right now. I shouldn't say fill up. We've got room for plenty more, but there are a lot of people that have signed up. And it's at 6:30 to 8. It's free. Eastern time, that is. And I'm going to be showing the core of the Chapman wave. And in that particular instance, the core says, I will take away all the moving averages. I'll only perhaps draw trend lines. I could even use bars. I don't need to use candlesticks. All I'm looking is for the highest high bar and the lowest low bar. That's all. Of course, I use candles for all the other things I spoke about. The dojis, they're very important. Look at this. This is the S&P. Who could say that we're in a bear market? Look, we've gone to leg B. It only needs to glow. The high this week is at 1368.92. We are less than 2 points away from breaking above the May high of last year. The Dow has already done that. You see the way these up channels have worked? It's just a simple thing. How can 2 lines give you so much information? How can 4, 5, 6 letters give you so much information? I'm going to be teaching, look at this, from 1990, October, you went peak A, B, C, D in the monthly chart, pull back. Another A, B, C, D. That's twice. Then you went to another A, B, C, D in the next phase, going to the high of June of 1996, pull back. You went to another A, B, C, D to the high of October of 97. Then it extended to that E and F, which happens, if anyone knows the song, suddenly it goes to E and F. A bell rings so loud it can make you deaf. All right, so it goes to an F, and then it pulls back very sharply. That's the sharpest decline from the 1998 July high. And then it goes where? To another 4 peaks. So in this one chart, it goes from 1990 to 2000. I've got 1, 2, 3, 4, and then there's an extension to E and F, and then another one, 5. Let's call it 4 out of 5, but at least it went to a peak D. I'm going to call it 5 out of 5. Every time to a peak D. Look at this next one. It goes to from the low of 768.67 back in October 2002. It goes to a peak D, and then just 2 months later, just slightly higher E in March of 2005, pulls back for 1 month, starts a brand new one, goes to a peak D in July of 2007. Everybody remembers this. And then I kept saying, there's one new high missing. I don't know, my stochastic, my work says that this, and we got that one extra rally that took you to a peak E at 1576, October of 2007. Now you can see what we've done again. We've gone to the peak D. How many peak Ds have we had in this one chart? What is it, 7 or 8? I'll show the technique of peak Ds when we get back. We'll be back with Joe in Boston, and I'll run all the numbers when we get back. Basil Chapman sitting in for Tom O'Brien. My honor, and I'm pleased to be here.